Interactive brokers. 9 regulators, 150 markets, institutional pricing. Worth the learning curve? Here's the honest answer. Interactive brokers isn't trying to be your first broker, it's trying to be your last one. And once you understand how this thing is actually built, the scale, the regulators, the routing, you'll see why almost no retail platform on earth competes with it on cost, market access, and regulatory weight at the same time. But there's a catch. There's a version of this broker that quietly costs you more than the paid version. We'll get there. Let's start with the scale, because the numbers genuinely don't have a comparison. Interactive Brokers was founded in 1978 by Thomas Peterffy. He's still the chairman. The company went public on Nasdaq in 2007 under the ticker IBKR. As of its 2023 10K filing, it reports over 2.5 million client accounts and more than $426 billion in client equity. No other retail-facing broker operates at that scale with that level of public market transparency. And the scale shows up where it counts, 150 plus markets across 34 countries. If you trade US stocks at lunch and Tokyo at midnight from the same account, this is the broker that lets you do it. Most competitors give you the US and a handful of European exchanges. IBKR gives you the world. That's the surface. Here's the mechanism behind it. IBKR was built for institutional smart order routing first and retail second. Every market it adds plugs into the same execution stack a hedge fund desk uses. You're not getting a bolted-on international feature with worse pricing. You're getting the actual infrastructure. That's why the broker can carry 150 markets without the fees ballooning. Okay, regulation. 9 regulators. SEC and FINRA in the US, with SIPC coverage up to $500,000 and an additional $150 million of excess insurance per account. CFTC for futures. FCA in the UK, firm reference 208159, FSCS covered up to £85,000. IIROC in Canada, ASIC in Australia, Central Bank of Ireland, that's the EU hub, MAS in Singapore, and SFC in Hong Kong. Most brokers brag about 2 or 3. IBKR has 9. But here's what actually matters about that list. It's not the number, it's the redundancy. If you're a UK client, your account sits under the FCA-regulated entity with FSCS protection. If you're in Singapore, you're under MAS. Each major jurisdiction holds IBKR to its own segregation, capital, and reporting rules. So your account isn't just regulated in name, it's regulated by the watchdog of the country you actually live in. That's rare in retail. Plus, the company is publicly listed. Every quarter, IBKR files audited financials with the SEC. You can read them. Try doing that with a private offshore broker. That's the safety side. Now the part most people get wrong, the platform. Trader Workstation, TWS. This is the desktop platform that built IBKR's reputation. Algorithmic order types, multi-leg options analytics, direct market routing, real-time risk dashboards. It is, genuinely, the reference power user platform in retail. It's also brutal to learn. If you've been trading on a clean, swipe-friendly app for a year and you open TWS for the first time, your reaction will be, what is happening on this screen? There are panels, sub-panels, floating windows. It looks like an air traffic control terminal. But that complexity isn't a bug. TWS doesn't hide functionality behind menus the way a beginner app does. It surfaces everything, because professional traders need to see everything at once. The depth that makes it overwhelming on day 1 is exactly what makes it efficient on day 90. If you don't want to climb that curve, IBKR has alternatives. Client Portal, the simpler web interface, and IBKR Global Trader, a stripped-down mobile app aimed at investors who mainly buy stocks, ETFs, and fractional shares. They work, they just don't unlock the full power of TWS. Very high ceiling. Real climb to get there. That's the platform trade-off. Now the part that decides whether IBKR is actually worth opening. Fees. On IBKR-pro, US stock commissions start at 0.0035 Zeners per share, minimum 35 cents per order, cap of $1 on tiered pricing. Options run 15 cents to 65 cents per contract, futures 25 cents to 85 cents, Forex at 0.08 to 0.20 basis points of trade value. Let me put a real number on that. A 200-share US stock order on IBKR-pro tiered, 200 times 0.0035 Zeners equals 70 cents. 70 cents. The same order on a mainstream UK broker charging £11.95, roughly $15. So IBKR is around 20 times cheaper per trade. But the bigger cost most people forget is margin interest. IBKR's margin rates are benchmark linked, and they typically run 1 to 2 percentage points below the retail average. On a $50,000 margin balance, that's $500 to $1,000 a year in interest you don't pay. That's the real edge for active traders. Since 2021, there's no inactivity fee in most jurisdictions either. But here's where I have to flag something. Remember the catch I mentioned at the start? The version that costs you more. IBKR runs 2 account tiers, IBKR-pro and IBKR-Lite. Lite looks attractive because it advertises 0 commissions on US stocks. Sounds great until you read what's actually happening underneath. IBKR-Lite uses payment for order flow, PFOF. Your orders get routed to market makers who pay IBKR for the right to fill them, and those market makers fill you at slightly worse prices than the displayed market. The commission says 0, the execution quietly costs more. IBKR-pro does not use PFOF. You pay the small per-share fee, and in return you get genuine smart order routing across exchanges, hunting for the best price. So the math flips. The free account costs you more in execution slippage than the paid account costs in commission, especially if you trade size or trade often. For almost any serious user, Pro is the right answer. That's the loop I opened at the start, and that's why it matters. Product range deserves a fast mention because this is where IBKR pulls away. Stocks, ETFs, fractional shares across those 150 plus markets, options, futures, bonds, forex, metals, mutual funds, CFDs for non-US accounts, plus stock yield enhancement and securities lending, which lets you earn revenue on the shares you already hold by lending them to short sellers. Most retail brokers don't offer that. One honest note, customer support is functional, not warm. Don't expect the eToro experience. IBKR's energy is execution depth, not hand-holding. So, who is this actually for? Open Interactive Brokers if you trade or hold across multiple countries. If you run active options, futures, or forex strategies. If margin interest 1 to 2 points below average actually changes your P&L. If you value a Nasdaq-listed parent and a 9-regulator footprint over UI polish. Walk away if you want an app that walks you through your first trade. That's eToro or Trading 212. If you only need a simple UK ISO or SIP wrapper, that's AJ Bell. If warm, fast support matters more to you than execution quality. And, critically, if you default to IBKR-Lite, because Lite undoes the cost advantage that makes IBKR worth opening in the first place. Final verdict, 9.3 out of 10. Interactive Brokers is the single most professional broker a retail investor can open. Low cost, global market access, regulatory safety, nothing else competes on all 3 at once. The learning curve is real, so is the reward. Interactive Brokers earns the 9.3. Open Pro if you trade actively, full review linked in the description.